Hey, we're 3 months into Healthcare Innovators. It's time for a quarterly update. I'm talking to you here in early August. We've got a full 3 months in since we started April 25th. So I kind of want to talk about some of the themes, what's working, what's challenging, and I want to give you some good resources. Let's take a look at the portfolio right here. And you can see, obviously, we've got a lot of green on top, and we got some red on the bottom. Some things that are poking at us, but we're going to talk about those. And we've been over them in the daily commentary. You know, we've talked about Nuvasiv with the Office of the Inspector General investigation. So that, that wiped out some good profits we had going there. Stock seems to be stabilizing in the lower 60s. And we've seen Regeneron report, but the stock was already down in advance of that report, which was a stronger report than expected. And, so we gave back some chunky profits there, but we're sticking with Regeneron. It will be a $500 stock again, maybe even get up to $550. All right, so you get to see this view of the portfolio anytime you want. You see it in an email when I send you a summary, a weekly summary, and you can look at it on the site anytime you want. What I do, though, for all of my portfolios is I create a portfolio tracker. So if you can see my screen here, I'm hovering over portfolio. Obviously, you can create a new portfolio anytime you want. These are some portfolios I have. There's a gold miners one when I used to follow them pretty closely. I've got a Chinese internet one. And then HI is my full Healthcare Innovators portfolio, and I have probably 20 more. But the great thing about using the portfolio tracker is all the information you can get with a couple of clicks. So this is the default view here, shows all the companies alphabetically. Watch what happens when I click on the Zacks rank. We instantly sort by the Zacks rank. Now, I'm going to show you a couple other things on here. I don't want to spend too much time on it, but because there's so much that you can do with the portfolio tracker, I want to mention that anytime you do create a new portfolio, it will default to sending you a daily email where you get updates on rank changes, estimate changes, broker ratings changes, that kind of thing. So you have to go into your settings on Zacks.com and select whether or not you want to get a daily email for that portfolio. All right, so back to looking at this. Can see, boy, two of our favorites right there are still number ones. They were number ones when we bought them, Edwards Life Sciences and Align Technology. And they're number ones again after strong quarterly reports. Epizyme is a 2, Gilead's a 2, Immune Design is a 2, Lilly's a 2. Some of these are working for us. Then a bunch of 3s. That's going to be normal in a portfolio of this size. And once in a while, we're going to have the occasional 4. Estimates had to come down for angiodynamics. But after that insider buying, I don't know, I emailed you about that in a weekly report that insiders came in when the stock went under 16 bucks, and a couple of directors were like, "Hey, we'll take some of those shares." So that we got a good floor in there above 15.50, and we're going to stick with it for the long term. So, it's going to happen where we get the stock that goes to a number 4 rank, maybe even a number 5 rank, and then we've got to evaluate, is this a temporary blip, estimates coming down, or is there a fundamental change in the business that would make me let go of it versus looking out to a 1-2 year opportunity? All right, a couple other things on the portfolio tracker. If you click on growth here, you can look at the portfolio in terms of growth, value, momentum, performance, price, broker recommendations, so much to look at here. But I want to show you real quick. Growth gives you your next earnings report date. And that's important with a portfolio this size is, so I'll go ahead and sort. And so I sorted to see the most recent. So Epizyme just reported this morning, August 4th, and gave us a pretty good report. The stock is back up above 13.50, I believe. Next week, we've got Tenet Healthcare, Biotelemetry, Sangamo, and then, we're pretty much done. We've just had a couple of big weeks here of earnings, you know, with 8, 9 companies a week. So now we're starting to slow down. All right, so let's talk about some of these reports. Let me get out of full screen here. I wanted to bring up some charts. All right, let me just go to stockcharts.com real quick to see how some of these are doing. And then I also want to give you some resources on the web, especially for biotech, because with biotech, there's so much, you know, there's you know, it's just a flood of information. And if, you know, and if we're not biochemists or molecular geneticists, it's going to be overwhelming for us to be able to understand all these different companies. And I don't, you know, I don't expect myself or you to. That's why we rely on the experts, analysts who are experts in the life sciences, who are talking to doctors and other key opinion leaders, and then going to the company websites themselves and seeing their presentations that sometimes are put in plain language. So let's take a look at Epizyme here after its report this morning. Nice move on this report. You know, I was a little disheartened to see it dip below 12, but we got a nice recovery going here. Let's take a look at Regeneron. You saw the big profit taking here, you know, from 525 all the way down to the 460s. Spiked up big yesterday, and that's because they're looking at, you know, Eylea is their main force for revenue. That the eye drug sales were strong, and their new dermatitis drug sales are also strong there. It's expected to be a $1 billion blockbuster, but you know, it wasn't an overwhelming report. So you've still got some profit taking. So we saw the stock spike back up to 500, and they sold it back down to 470. But I'm looking at a report here from one of my favorite biotech houses, Lyric Swan. And after the Regeneron report, I mean, they were positive just from the Sanofi report, which sort of gave us a lead into the dermatitis drug. But after Regeneron's report and looking at the whole business and all the segments and what's in the pipeline, they raised the price target to 580. And they're also looking at the possibility of lower taxes, which always helps big pharma. All right, so let's talk about a couple of our more troubled plays, like Sangamo. I was encouraged on the breakout above 950. We jumped in, and the stock has fallen back below $9. But holding its 50-day, and I just read a report from Wells Fargo. They just met with management about 2 days ago, and they're very encouraged by the pipeline. Remember, this is the gene editing that uses the zinc finger proteins as opposed to CRISPR. So there are some who believe that zinc finger, doesn't have the same potential, but there are many who believe it does. And the other thing you get with Sangamo is their partnership with Pfizer for hemophilia A. So, Pfizer wouldn't come in there and make this bet unless they believed in the science. So we're sticking with Sangamo, and I'll give you an update if I think that if you should add to the position. All right, let's talk about Blue. I think Blue just reported. Blue did. Got a little dicey there. Dipped all the way down to like 86, and has come back nicely. Let me make this chart a little bigger so you can see what's going on here. So, we bought this around 95. We're at break even. I mean, I think it's a long-term hold. We own 2 of the 3 biggest names in immunotherapy: Juno and Blue. We do not own Kite. Kite seems a little pricey to me right now. So I don't feel like we have a good edge, and we don't really need to own all 3. We also own Novartis, who has a major partnership with Kite. So that's kind of nice. Let's talk about Intercept. Intercept was a big disappointment so far, but seems to be finding a bottom. once again, at this 105 level. So, and it's been down here so many times. And there were houses that raised their target. Now, this is the one that was trading over $400, 2-3 years ago, because of the possibility that their drug will become a cure for NASH disease. And that is, that's going to be a breakthrough when somebody gets there first. And Intercept is considered ahead of the pack when it comes to a cure for NASH. So that's why you have these price targets like Jeffries, $275. And I think it was Wedbush this week who just raised their target from $231 up to $253 because they're modeling, some of the parts, and they're finding that other indications for the drug, will add value down the road. So this is one we're going to hold here. And to be fair, I'm going to give you one analyst, investment bank house, that is very bearish on a couple of our names. Cantor Fitzgerald, the analyst there, he is extremely bearish on Intercept. I think he has a $60 target. He reluctantly raised his target from 60 to 69, I think. And what was the other stock that he's really bearish on? Blue. He doesn't like Blue either. Bluebird Bio. He thinks Blue. He has like a $39 price target on Blue. So I need to find some more research by the guy from Cantor Fitz and find out what his reasoning is. It's one thing to take that hard line, and maybe he knows something the rest of the community doesn't, or he's trying to make a name for himself. But I want to find out because. I always want to know what the counter argument is, especially with a biotech where there's a lot of uncertainty. You're in a phase 2 trial, and who knows how things are going to turn out, or if the FDA is going to be supportive, or if there's going to be a patient death, and then is it linked to the drug or not, the treatment or not. All right, so I talked about a lot of our stocks after earnings here. I mean, overall, if we just take a look at the portfolio again, we've come through the bulk of earnings season in pretty good shape. Yeah, we've given up some gains in some places, but look at Align. Align, all-time highs here at 170. I just wrote it up this week as for bull of the day. Immune Design, hey, Sangamo and Epizyme weren't going. They were like $10 stocks that weren't doing so well, and we've done well with Immune Design. Juno is working for us. Edwards just continue. Edwards reported, and the stock dipped down to 113, but it's holding here. And this is what I said when I bought it. I also bought Edwards Life Sciences. They make the transcatheter heart valve replacement technology. I bought it for my Taser portfolio just on a technical basis because I said this stock is not going back below 110. And it just proved that here after some weakness. Couldn't get through 120 on the strong report, but there are buyers down at 113, so that's nice to see. Centene in managed care is holding up well. Novartis is working. Inogen is the portable oxygen concentrators. And Gilead, seems like we may have found a bottom there. That's the thing about Gilead is, I couldn't resist buying it in the 60s, and this could be a long-term bottom here forming. It's got to do some back and fill, maybe even test 70, but it was good we were able to pick it up in the 60s. Celgene, love it. AbbVie, I'm encouraged. Baxter, it's just nice to be in some products. Sarepta, long-term play. We're in at a decent level. Talked about Angio. Johnson & Johnson is must-own. And biotelemetry, that's I'm looking forward to players that are involved with any kind of heart therapies, rhythmic monitoring, like a Medtronic, if they're interested in biotelemetry's technology and platform, and that could be beat a possible takeover candidate. All right, so I wanted to give you some other resources real quick. Fierce Biotech. If you really want to, immerse yourself in the language of these biotech companies and how they relate with the FDA and how they bring drugs to market, this is the newsletter to sign up for, Fierce Biotech. You can get a daily email with all the top news in biotech, and it's just an excellent resource. I love to get it in my email box every day because it shows me top 10 stories of the day kind of thing, and I can find out who's doing what. If big pharma is on the prowl for a little biotech, or a little biotech is got a successful trial or a failed one. So great to know that. I also want to tell you about a biotech index that I follow. Let's see if I can find this. Loncar. Let's look up that. Loncar Biotech Index. There it is. This guy is named Brad or Brandon. I'm not sure. But he has got a couple of indexes that he created himself. And he's just, yeah, Brad. There he is. So Brad Loncar, he, is a life sciences major and is passionate about biotech as I am. And so what he did is he created a couple of different indexes. He's got he created a cancer immunotherapy index, and so that's done nicely. Let's see what time frame that's over. So he knows a lot of these companies even better than I do, and there's just so many to look at. But it's interesting to follow. So he created this index in 2015, not too far from the biotech bubble. And so it's trying to find its place. So he's somebody, you can find him on Twitter too, and get some more information from him. All right, so we talked about a lot of themes here, and we've survived a tumultuous earnings season. We've survived the near-death experience for repeal and replace of ACA, Obamacare, and the one way that we got hurt with that was with Tenet Healthcare. But, we're not even losing money there. We just watched a 20% gain evaporate because there was optimism about the hospitals, and then that sort of turned because it seemed like now some analysts could argue either way, that a repeal and replace hurts the hospitals, or repeal only, or skinny repeal, So, but it's our only hospital, and I think we'll stick with it for now. Got any questions? Anything you want me to cover in the next portfolio review? Don't hesitate to email me, kcook@zax.com, and enjoy having you here. Let's keep winning with healthcare.